Big story this morning, and a bank that sees no end to its woes, frankly, is IndusInd Bank. SEBI last evening barred former IndusInd Bank Chief Executive Officer Sumant Kathpalia and 4 others from dealing in the stock market. This comes after a series of evidence found by SEBI revealed insider trading. But how did this entire fiasco unfold? My colleagues Vishwanath Nair and Hersh Sayta join in to explain the timeline of events and these very, very serious allegations. Vishi, what is SEBI saying?
Right, Tamanna. So essentially, I'll just give a quick gist of the order. 5 people, Sumant Kathpalia, Arun Khurana, Anil Rao, and 2 others have been named in the insider trading allegations in this SEBI interim order. This is an ex parte order, which means that these people who've been named have not yet been spoken to by SEBI. They have time to respond to the details that SEBI has put out. Importantly, SEBI has also impounded 20 crore worth of funds in spread across the bank accounts of all of these 5 people. So this money cannot be used by these people. Essentially, this is money that they earned because of the insider trades that they executed. SEBI says that the management of the bank, the top management, which is Sumant Kathpalia and Arun Khurana, they were very well aware of the problems in the derivative accounting portfolio back in December of 2023, which goes against everything that we know in this case so far. So very important detail there. SEBI also says that Kathpalia, Khurana and the others acted on this unpublished price-sensitive information and that these people then engaged in insider trading. I'm going to take you through a little bit of a timeline as to what exactly happened in this entire case. Things start off in September of 2023. That's where essentially the bank creates an interdepartmental team which will implement the RBI's accounting trading norms into the bank's balance sheet. Fast forward to November of 2023. There, the CFO has written to Arun Khurana and a couple of other people in this order, essentially saying that, listen, I have not yet received the impact analysis from your team about the derivative accounting. Please send that to me as early as you can. A day later, on the 21st of November, he says, we have done this exercise with KPMG in the past. We have data that comes into the system every 6 months. So I need to get this data right away so that I can ensure what is exactly the hit that is coming on the balance sheet, because pro forma basis, there's a large hit. 29th of November, the same request is made now by the head of the balance sheet and liquidity management team at IndusInd Bank to Khurana and the others, saying that, listen, we need this report ASAP. And Khurana and the others have not yet shared the details. Then on the 30th of November, I'm assuming that 29th, they received these details and an amount of financial hit is calculated. This is the first estimate of a financial hit because of the derivative trading, which is about 1,750 odd crore on the balance sheet. Come 4th of December, that's when Sumant Kathpalia enters the picture, the MD and CEO of the bank at that point in time. He writes in an email to the CFO and Arun Khurana saying that, listen, we need to do the reporting of this number. It's a very, very big hit, essentially proving that he was aware on 4th of December that there is going to be a large financial hit on the bank because of the derivatives accounting. A week later, 11th December, he says that the final number has been calculated. It's at about 1,572 crore. Again, Khurana, Sumant Kathpalia and the CFO, all 3 of them are talking to each other, exchanging emails, discussing what exactly is going on. Sumant Kathpalia says that we need to get an external investigator into this matter, and the CFO says, yes, we are going to look at it. So 17th of December, the CFO says, we are looking into it. Come January of 2024, essentially KPMG is appointed to look at this case and investigate what exactly is the financial hit. Their job is to validate what the internal team has found. And come February, KPMG says it's a 2,000 crore hit. So between December 2023 and February 2024, now the whole bank knows that there's a 2,000 crore hit on the balance sheet. KPMG says, listen, we need some time with the senior management, we need to sit down. We don't know if that meeting ever actually happened and whether a report was made to the RBI. SEBI says that there were talks about reporting to the RBI, but nobody knows whether a report has actually gone to the RBI or not. This is essentially the gist of what exactly happened over the course of 3 or 4 months at IndusInd Bank, clearly proving that the bank knew what was coming at least 15 months before the rest of the market found out. I'm going to get in my colleague Hersh Sayta, who's going to take you through what exactly has gone, what exactly these executives did with this information and how they traded in shares to earn a profit.
Well, absolutely. Let's talk names first. Thank you so much for that, Vishy. Let's talk names first. And, of course, designations and what the current status of these persons are. Those are the 5 names on your screen. Arun Khurana, Sumant Kathpalia, you have Mr. Sourav, Mr. Jathanna, as well as Anil Rao. All 5 of those which SEBI says have executed insider trades, or rather trades based on unpublished price-sensitive information. 2 of them have already resigned, 3 of them not yet. Now let's talk dates, because Vishy spoke about certain dates on which emails were exchanged, information was made privy to the management, and that's why I highlight some of these dates to you, along with the quantity of shares sold. 3.5 lakh shares sold by Mr. Khurana, who was the CFO back then, on the 4th of December, just when all of those emails were getting exchanged with regard to the hit being a large one, and acknowledging that. So again, something to keep in mind are some of the dates. Now let's talk about the numbers involved, right? In terms of how large the number is, the number of shares sold, of course, okay, step back. No shares were purchased during the period between 2023 December to 2024 February. Just to kind of cull that out, it's an obvious statement. But that's another of the observations that SEBI has made. Now let's talk numbers. In terms of how many shares sold and at what price, look at the sell value out there and look at the average selling price. These are the 2 numbers I'd like to highlight for you. 1520, between around 1265 to 1520 was the average sell price. Some of them obviously sold between 30th of November and 15th of December. And look at the sell value as well. 53 crore, 20 crore being the larger material ones made by Mr. Anil Khurana and Mr. Sumant Kathpalia. That's the other piece I want to highlight. Let me quickly now look at how the stock price has moved post the disclosure. So stock fell 27% between the 3rd of March and the 27th of March. But on 3rd of March, the stock was already languishing at 979 rupees a piece. Mind you, a lot of the sale had happened between 1265 and 1570. So therefore, this is a far cry from that number. But the stock has fallen from 979 to 677, which is a 27% drop in stock price. And that's why let's talk about the value which got saved or the loss avoided. Mr. Anil Khurana, 14.5 crore. This is SEBI's quantification. Mr. Kathpalia, 5 crore. 7.5 odd lakhs, nearly 7 lakhs, nearly 4 lakhs. That's how the breakup is. Now, I want to quickly also talk about what this means in terms of the overall number that they make annually. As per FY24 annual report, this is their remuneration, 5 crore and 7.5 crore. That is the quantum of loss avoided. I'm not even talking about the sale of shares, because sale of shares, they made 50 crore and nearly 20 crore odd. And therefore, that number is 3x just in terms of loss avoided to the total remuneration that some of them have made.